What's good, y'all? It's HB Punch and Profit. We're going to break down price action in the Nasdaq February 25th, 2025. But before we get started, like the video, comment down below, subscribe if you're new. It helps the channel, helps me find the time to provide you guys with free content. So, first thing is first, we need our high time frame. I get on the charts about 9 a.m. I look at the daily 4 hour, 1 hour. When I'm seeing the 1 hour today, I'm seeing predominantly bearish order flow. I believe we were inverting a gap roughly at that time, so I was bearish on the higher time frame. Now, obviously, as the day progressed, and that's why I say I never really have a hard definitive bias. I have one that I lean more towards, but things can change as the session goes on or as price action change or news comes out. But initially, the higher time frame was bearish for me. Two, we're going to be looking for our inversions marked out in the orange box. Then we will be looking for our advanced market structure shifts in the blue line. Usually that will be our entries. And then four, stop at swing highs and swing lows or at your discretion. And then our take profit will at least be a 1-to-1 or more. And same thing as four. For five, you can also have your take profit at whatever your discretion may be. Okay, so those are our rules and signals we're looking for. Roughly at the 9:30, there was a few inversions you could have played off of if you had the higher time frame proper. There was a good one. Let's say right here. This is the trade I took. Okay, this was a clean one, bullish fair value gap, bearish fair value gap, but you had to deal with some rough drawdown. That's why I say never over leverage. Right here, you had the advanced market structure shift, and it looked like we might be choppy for the morning, but if you held through this trade, you would have gotten a nice move to the downside. Okay, so there was that inversion, advanced market structure shift, had to deal with lots of drawdown. Right here, about 38 points, but if you have one micro or two micro, that's not that big of a deal. Okay. Now, is there an alternative way to enter this with a tighter stop? Yes, but that's for when I get a mentorship. I'm not going to give all my secrets away. There was also a nice inversion before that occurred right here, and I believe this was right before the 9:30 opening, and you didn't have to deal with as much drawdown. Okay, your advanced market structure shift would have been here, and you would have taken little to no drawdown. Boom, only about 4 to 5 points. Okay, we'll frame that trade first. Stop at the swing high. Swing highs right there off of that first inversion before the opening. And obviously, as you can see, that would have been lots of meat on the bone. Not that you would have caught this whole move, like I say, but I'm just showing you all the meat on the bone, right? You could have framed that trade very nicely. So let's go to the second one after the 9:30 opening. This one with the stop at the swing high. Let's get rid of the old signal. Stop at the swing high, 41 points. Let's say you aim for a 1-to-1. Hits nicely. Obviously, could have offered 321 points. So you could have framed that trade very successfully in a variety of ways, whether it be 5, a 3, a 2, a 1, it would have worked out very nicely as long as you held through the drawdown. Then we had our 950 macro. I also had a scalp here. This was a very nice one. A lot of people got faked out, thought we're going to move back up because we got an inversion to the upside. But guess what? You don't get that advanced market structure shift up here. So you got to wait for that advanced market structure shift. You don't get it, and boom, we continue down. So even though you get an inversion in here to the upside, you don't get the advanced market structure shift. So you shouldn't have taken it. Okay, so this is where our inversion occurs. Bullish gap overlapped by a bearish one. There's a volume imbalance in here, so that's why that is considered a gap. Okay, if we zoom in, bullish volume imbalance, bearish gap closes over, and you get your advanced market structure shift at the candle body low. Little to no drawdown. Okay, let's get rid of the ICT macro signal real quick. Let's frame this trade for at least a 1-to-1. Okay, and there, your 1-to-1 offered you 75 points. Okay, you don't have to keep your stop all the way there. You can keep it just above the inversion, just below it, right? And then your risk to reward really gets good, even with that big stop. If you're not over leveraging, it's no big deal, right? You get at least a 2-to-1. Okay, as the trade goes in your favor, start to bring that stop down. Okay, maybe you do like a 3-step phase.